Hey everybody, Artwood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me. I will tell you. So we're continuing our series today of answering questions with "it depends." So what do I mean by that? It's like, and here's the question of the day: what are rates today? I get asked that question by real estate agents. I get asked that question by clients, by the general public. And my response is, it depends. So a couple things on that. Number one, like today's published rate on Freddie Mac was like 6.35 or something like that. But is there closing cost? Is it an investment property? What's your rate? What's your loan type? How long are you holding the property? So when I look at a rate sheet, it's kind of like a choose your own adventure, not a rate sheet. Those are long gone. But when I'm looking at pricing out a loan, you have to ask all those questions. First is, is it going to be investment property? Is it going to be a second home? Is it going to be a primary residence? If it's going to be that, all right, great. What does your credit score look like? How much money do you have to put down? How long are you going to be in the property? And the reason I say how long are you going to be in the property is because when I'm pricing out, when it pulls up an actual rate sheet, there may be rates on there from 5% to 8%. And 5% is going to cost an ever-loving fortune, and 8% may actually have a lender credit. So I've had folks that say, look, I'm going to buy the house, and I really only expect to hold the mortgage for 6 months or a year before I pay, sell this, do this, whatever, pay it off. I'm like, all right, well, instead of getting the lowest rate and or paying discount points or whatever, let's bump that rate up by 0.5 point, 0.75 point or whatever. So I, the lender, can pay some of your closing costs, some or all of your closing costs. Because typically the difference between a higher rate and lower closing costs and lower rate and higher closing costs, the break even is about 6 years. So anyway, you can see there's a lot that goes into it. So really you just need to call your favorite mortgage guy and let's go through that, and let's go through that series of questions. It literally takes 5 minutes, and we can talk more about what your rate would be today. And I never really asked, but if you're seeing this on TikTok, Instagram, whatever, and we're not friends, we're not connected, please connect, please follow, please add, all those things, and just comment at the bottom or DM me if you have any questions. But I would love to turn your mortgage into a work of art. Take care.